Hi there, welcome to Funding by Alex. Today I would like to discuss with you startup metrics and what is important and what isn't. Important to understand is that the game has changed. GMV, gross merchandise value, used to be king. That is basically the revenue a company was making. The influx of cheap capital, or low cost of capital, thanks to COVID measures like banks, financial institutions, they were forced by the government to lend money to various companies, meaning there is a low cost of capital for those companies and they needed to deploy it. Venture capital was one of the avenues that this money flowed to. At this moment, it's different. So you still need to grow, but you also need to be profitable while doing it. Then monthly recurring revenue versus annual recurring revenue. That is basically a predictable monthly revenue stream that your company is making, and a yearly one. So those are two metrics that apply really for companies that are up and running. So if you pre-revenue, then you look more at traction in absence of financial results. Traction can be, various metrics that have to do with user adoption, etc. I'll go into that in a moment. These pre-revenue metrics are monthly active users. I'm saying monthly in brackets because in essence it's active users count. So how many people are actually using your application? How many are using your service? How many are using your product? Then from those users, the user retention rate is also very important. Uh, Retention meaning how many people use your product or your service and continue to use it. So not like, okay, I went to the app store, I downloaded it, I used it for 5 minutes, and then I deleted it forever. Then user engagement. So how long are they using your app? How long are they using your platform? This is something that, for example, Facebook had a very interesting experience with in the beginning because number of users was not that many at that time, but they could show that people were spending hours and hours on their application. So that was very interesting for investors because they had a very high magnetic quality basically to it, even if the user count is low. So user engagement is a very important metric for pre-revenue companies. Since you are pre-revenue, yeah, there's no financial data to show, so you can't really predict anything because pre-revenue means also normally you are in the ideation stage. You still have to prove the concept, so you're looking for pre-seed to seed funding. Usually pre-seed is to prove the concept, conceptual proof basically, and seed is actually when you have some traction and you want to um, start to sow the seeds basically to grow it into a tree. So if you're up and running, there are a couple of other metrics that come into play. So first is the customer acquisition cost. So how much does it cost to acquire a customer? It's important to link that to the customer lifetime value because customer lifetime value is, let's say, you acquire me as a customer and my customer lifetime value is that every month I'm paying $1 to use your service or your product. Now, this dollar times 12 basically is your annual recurring revenue from this customer. And you can say, like, okay, I'm using the service for an average of 5 to 10 years. That's the way you can actually predict my customer lifetime value. And the acquisition cost, if you're spending $100 to acquire someone who spends $12, yeah, that's actually a negative equation. So then monthly recurring revenue, I already touched on that in the previous slide basically, but that's a predictable monthly revenue that your company is making. And the ARR, annual recurring revenue, is the annual version of that. So in essence, what investors are looking for is a little bit of predictability, meaning like, okay, what is it currently? And if I put in the money, how much can I grow? Then runway and burn rate, those two are linked as well. Your runway is basically, imagine, the term comes a bit from uh, aeroplane. So aeroplane is taking off. If the runway is too short, yeah, the aeroplane will not take off and you will not fly. So the burn rate is how quickly you burn the fuel in the plane. So runway would be the company's runway, and the burn rate would be the money in the bank account. How many months will it last you before you run out of fuel or you run out of money? Churn rate is very important. That is the churn rate of users, can be churn rate of customers as well. Basically, yeah, churn rate is how quickly you are losing customers, how many people are not retained basically as a customer. Then gross sales value, so that is a bit like GMV. So you're talking about sales, total sales basically. Then average order size, also very important. Like, how scalable is it? So normally B2C has a very fixed and low average order size. If you're talking about B2B, that is usually where order sizes become, more fluctuating, basically, can be scaled. Then net promoter score, NPS, is like how many people would be so happy with your service that they would promote it to other users, meaning NPS. And last but not least, this is a very elusive sort of metric, but it's called the virality factor. I also mentioned the K factor, basically, because probably from K-pop. Virality factor means like how popular is it at this moment and how likely is this going to be viral. So if you have a solution which is AI is a very good example that has a very high virality factor because everybody's using it, everybody is very amazed about the leaps in development that AI is going through. So anything with AI in it currently has the virality factor. That is, eventually it will be finite, basically, not infinite. How virality factors are developing, but some industries have that advantage. Some don't. If you have that, that is a very interesting metric to track. Unfortunately, I come across these vanity metrics as well. Vanity metrics, as already the word says it, it's purely for your vanity. Oh, how well am I doing? The core of it is actually the actionable metrics that I presented to you in the previous slide. These are things that you know where it's coming from. These are measurable. These are actionable, basically. You can do something to influence them. Now, vanity metrics, for example, number of website visitors, number of app downloads, or last one is not really a metric, but money raised, basically, the total money raised, these are vanity metrics. So the number of website visitors, you can buy traffic, number of app downloads. Similarly, there are so many examples of companies say, oh, I have a million app downloads. Yeah, there's all people who, use your app for like 10 seconds and then delete it forever because it's too complicated to use. So what is it worth, this vanity metric? And money raised, yeah, there's no awards for, oh, company has the most money raised, because money raised is not equal to success as an entrepreneur. So a lot of companies that raise a lot of money and then go bankrupt or simply don't make it. They don't have the product market fit that they were looking for, and eventually they have to pivot or give up, basically. So these are the vanity metrics that you need to avoid. Investors are very trained to see through it. It's actually a big red flag if someone comes up with something like this in the first deck, because that means you have something to hide. You are not clear about what you are going to present, and you're maybe not even clear about what you want to achieve. So last bit of advice I would like to give you with regards to metrics is that the story is very important. So you have your team, your idea, how are you going to do it? In the end, investors are only interested in who are you? Are you able to conceivably carry out the idea that you have presented to them? Do you know enough about it to make it a success? No, that's basically it. And can you build what you have in mind? So that is very important to keep in mind as well. There's a lot of people with great ideas, but they haven't got a clue whether technically it's possible. So these are the things that investors are looking at, and these metrics are normally things that both come up in pitch decks, teaser decks, presentation decks, basically, and in monthly reports or quarterly reports or annual reports, basically, for startups to their investors. So the idea of these metrics was like you can influence something, and then these metrics will improve. So these are, basically this is an example of how investors will measure how well your company is doing and whether you're worth to invest in or keep investing in. So we've come to the end of the presentation. Thank you so much for your attention. See you in the next video. Don't forget to like and subscribe.